What type of financial products and services are available on decentralized finance versus traditional finance? Traditional finance, they created all the services that we look for now, right? You get interest on your money. You can borrow against your money, or they'll give you loans for homes or businesses if you have good credit, right? Of course, there's high money market accounts that you could put in that get you more interest. They have customer service, right? You can walk into a bank and you can talk to someone. So that is a huge thing to a lot of people. People like to have a physical location that they can go to and speak to somebody or call somebody and say, "Hey, my bank account has this issue." But a lot of times, the reason it has those issues is because of its centralized nature, right? They're trying to stop you from doing stuff because, again, there's laws that they may want to like make sure you're not doing anything illegal, right? So again, the traditional finance system is based on a lot of laws that were created to make sure our money's safe, right? So, and again, we're not doing anything illegal. There's anti-money laundering laws. There's what is it? Anti-money laundering and KYC, which is know your customer. So that means for the government, they want to understand you're not a drug dealer, you're not a terrorist, right? You're not bringing in money and using it illegally, right? Because many banks have gotten in trouble for looking the other way for certain customers, right? So that's what traditional banks have. In the decentralized world, and this is where they come into scrutiny, is they don't have anti-money laundering. They don't have KYC because it's just code. You put your money in and you take your money out and you do what you want. They don't even know who you are. They only know the wallet address. So traditional and the media says, oh, these are all everybody using it is drug dealers and terrorists. But that's not true, right? It's like impossible because one of the ways that you have to get into decentralized finance is you have to bring your money through a KYC AML crypto company. So a lot of times when I teach people through retire your bills, we teach them to go through Coinbase because Coinbase is anti-money laundering and have a KYC. When you sign up for Coinbase, they ask you to put your ID. They ask you to put your address, your social security. That is KYC. They know who you are. And then they make sure that your bank relationship is also covered because to create a bank account, you need to do all those same things. So you got the double redundancy on KYC and AML on crypto. In the traditional bank space, they just need it one time because they're doing everything there. But the differences are if I wanted to take out a loan. So this is what I teach people on the Retire Your Bills, retireyourbills.com, is if you wanted to take $100 loan from yourself, if you had a $300 deposit in your bank, you can't do that. You can't go to a bank and say, "Hey, I got $300 in my checking. Can I borrow 100?" They won't do that. They say, "No, take out the 100, pay the fee to take it out, right? Whatever, either if it's at an ATM, you're gonna pay the ATM fee if you're not in your current bank. But if you are in your current bank, you don't pay the fee. If you go to the register, you don't pay the fee." With crypto, there's fees on the blockchain and there are fees on the platforms, the different platforms, but they're very, very small. Like I'm talking about pennies, right? Because to run a blockchain, because it's decentralized, everybody running it and using it is basically an investor in the network. So by us using these blockchains and these protocols, which are all open source, meaning anyone around the world can look at the code, help the code be better than it is right now, and get better. We are not only the users, we are also the owners of these platforms. Versus the traditional banks, we don't own anything. Even if you buy stock, you don't really have a say in anything, right? You could be a part of, if you have a certain amount of stock, you could be a part of the votes. But in the decentralized world, you are literally the vote. Like they vote, and whatever the community votes, the community gets. So last week, when everything was going down, USDC had a problem, and the community that night voted to pause USDC in certain places, not even everywhere, just in the places where it had the most risk, and it went through in less than a day. In less than 24 hours, there was a vote created and a vote voted on that chose to protect the customers, right? And the customers made the vote. So that is a huge deal. If you really think about what's happening, what's about to happen, they're going to raise fees on us because now they got to pay this insurance, this higher insurance premium. If it was in the traditional finance, I mean, if it's traditional finance, that's just the CEOs making that decision. If it was in the decentralized finance world, we would be making that decision and we would say, okay, explain to us why the rate should be this rate. Okay, that makes sense because we want this to exist. So we're willing to pay this much more, but it shouldn't be that much more because, again, here's the major difference of traditional and decentralized finance. There's no real people at the top getting billion-dollar bonuses by just charging an extra percent or two. That doesn't happen because, again, it's all very public how everything works. So we get to see how everything is. So if we see, hey, they're raising this so this one person could get a bonus, you can literally see everything. You can see what happens in their wallets. And again, depending on how technical you are, where I basically rely on the super geniuses to go through the blockchain transactions and tell me on Twitter mostly. And then we vote based on what we see. But it's still public. It's not that it's not accessible. Yes, you may not be technically as proficient to go look, but there are people that can. Versus in the bank world, unless you work at the bank, there's no way you're going to have access to that data, right? And you're a top level person at the bank. So the amount of people is very small that would know if the bank is in trouble. So another big thing that happened last week or a few weeks ago was the top level people at Silicon Valley Bank started selling their stocks, sold millions of dollars worth of stocks. So the idea around the space is they knew what was happening and they knew they were about to go out of business or go down tremendously in stock value. So they sold their stocks before it all went down. And that is technically illegal, but somehow people get away with it. Right? So again, that can't happen in decentralized finance because we all see what's happening. We all see the macro environment, meaning the whole world, how the finances of the whole world are going. And we can see directly what's happening with that specific platform that you're using. So that is a big deal. That's a big deal, right? So okay, we spoke about that. We spoke about the fundamental differences. We spoke about the different types of financial products. Okay, so on decentralized finance, you could do all the same things in a bank. The difference is, all right, so not all. There's nobody to go in and speak to. You can't walk into a decentralized platform bank because they don't exist. That's part of why the fees are less, though, right? A lot of what traditional banks have to charge for is because they need to pay for all these people and all these locations, right? So when you pay for a bank, you're paying for that overhead. When you pay all those fees, if you're paying fees, I'm sure everybody's paying fees in some way. You're paying for the access and the amount of bodies that they need to run this bank. Again, some people higher paid than others. Some people way, way, way higher paid than others. So that's where, do you get to decide how much this person's salary is? No, right? This person could be making $100 million a year, $250 million a year, and you may not feel like that's worth it. But again, you have no say. Versus in decentralized finance is all code, so there's actually nobody that works on that level. There's developers that provide code to the open source platform, and they get paid in their own ways. Aave is one of the banks. Compound Finance is another one of those banks. They do have people on salary that add to the code, but they have a token structure and all these different things of how they make money. Of course, they have fees on every transaction, which makes sense. The blockchain also has its fees, but you can make a loan to yourself at a sub 3% interest rate in a second, versus going to a bank right now. The interest rate is much higher than that, and you have to fill out all kind of paperwork. You need to see if you have good credit. You need to see if they will let you do it, because again, there's been historically different treatment based on what you look like and what race you are in banks. They've even found studies where minorities had higher interest rates or didn't get improved at all for loans. And that again doesn't happen in decentralized finance because it's code. They don't know who you are. They're not racist. They don't care. As long as you put your money in and you borrow against money that you put in, they can't lose, right? So that's a big difference. So